honestly, we're still very much bullish on beating fiscal 25 numbers with the number of deals we got, and because we're building those two large scale machines right now. It could be like call it a historically normal Q1 where it's not that as strong as the other quarters, and then Q2
Yeah.
before the end of March. Hoping to transact on the two large scale to start building the next two. But if that happens, we'll print like another $5 to $6 million quarter. You know what I mean?
EnWave's CEO, Brent Charleton, is here to give us a review on last year's accomplishments and the coming year's goals and expectations. EnWave is a global leader in vacuum microwave dehydration for the food, pharmaceutical, and cannabis industries with its unique recurring revenue model. I'm Martin Gagel with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Brent, Happy New Year, if we can still say
Happy New
that.
Year to you as well. Yeah, we're almost past that point where we can now, 20 days into the month, but Happy New Year.
Yeah. Happy New Year. Well, you've got sort of two New Years. You've already finished your fiscal Q1 at the end of December, I believe it is, and you announced your year-end results in December. So why don't you give us a quick rundown on last year as well as your fiscal year-end results before we start looking into the front window?
Sure. I mean, it's been an interesting past, call it 5 months or so as we wrapped up, as you mentioned, our fiscal 25 at the end of September and had what a fantastic year. Like we look at comparable financial performance for fiscal 24 and 23, we made major strides in terms of total revenue growth. We're up almost $5.5 million in top line in fiscal 25 over fiscal 24. And more importantly, we also saw our base royalties grow year over year, and we anticipate that to continue through fiscal 26. As we lead into Q1, and we look historically at our Q1 performance in past years, a lot of folks go away on vacation in December and pack it in. So some deals that, of course, we would have liked to close before December 31st have now pushed into Q2. But overall, as we have the outlook for this full fiscal year, we're still very much confident in achieving better numbers in terms of top line and royalty growth, and hopefully the number of large-scale machine transactions that we can close. Also of note, in fiscal 25, we were able to close important life private placement for $3 million raised. And the sole purpose of the capital that was raised was to build out our inventory of our large-scale equipment, given that it takes us 6 months to build these units and we recognize revenue on a percentage completion basis. So as of the end of Q1, we are approximately 50% through the building process of two large-scale machines going into our inventory. And we're hopeful of getting closer to the finish line on both of those machines before the end of Q2. And of course, selling those machines before the end of Q2 would also be nice, giving us a great opportunity to recognize a significant portion of revenue tied to those two projects. In addition to the large-scale opportunities, I said it was a bit quiet during Q1. Well, it's sort of like consolidated into Q2 here. There's a number of new 10 kilowatt, which is our smallest scale unit transactions that we're hoping to announce to market in the coming weeks here. Some of which are in verticals that we've not yet commercialized our technology into, and some into new countries that we don't have any presence in. So excited to talk about more details pursuant to those deals. And in many of those situations, it's when a company is committing to small scale technology with EnWave, but has aspirations, some of which near term, to scale up to large scale units sometime in the latter half of fiscal 26. So we're excited. We're bullish on our operational execution and what we have planned for the coming quarters. And yeah, I think that's just sort of a reflection also of the good work that our sales team has been doing over the past year, because you don't necessarily see instantaneous results from those efforts. They're building a pipeline, and now we're getting to the point where negotiations are taking place and decisions are being made.
I guess the big thing that investors should be looking at for the coming quarter here is you're in the process of building those machines. Obviously, you've got a lot of companies in the pipeline that you've got good expectation that someone's going to pick those machines up. Those are progressing nicely, and it's just hopefully a matter of time.
Well, yeah, hopefully a matter of time, exactly put, because it's not like we're relying upon singularly, one or two opportunities to sell those machines. We have
Yeah.
Several large machine sale transactions we're hoping to close this fiscal. So any one or two of those coming in a more timely fashion is welcomed because then
Yeah.
that unlocks our ability to start building the next two large scale machines for inventory for quick deployment once the next two transactions are confirmed.
Yeah.
And so that's the playbook that we're going to be following on a go-forward basis, given the potential demand for more machines being deployed, is to continue carrying a higher inventory level, again, for faster revenue recognition on a go-forward.
You would essentially have two machines kind of continually on the go, and assuming, and what it sounds like is that you've got enough visibility in your pipeline that it makes sense to keep that going.
Yeah, in an ideal setting, we would have that. And
Yeah.
and and we talked in times past about repeat purchase orders and instantaneous market demand for increased volumes.
Yeah.
And so for a company like Branch Out Foods or for a company like Processor or Milne Microdried, when they're
Yeah.
closing these large supply contracts, they can't wait, 7, 8 months to start supplying the necessary volumes from contracting these sales opportunities. They need it as fast as possible. So we talked about building those two large scale machines for inventory, but also in the past, month and a half, we've delivered the machine to Branch Out Foods, their fifth large scale. The two machines have been completed in terms of fabrication for Milne Microdried. And then late last calendar year, Processor started up their full capacity utilization on their 120 kilowatt that was delivered. So what is that? What is the leading indicator there? Well, hopefully more royalties because we've got, four new large scale machines readily available for production throughout the full fiscal 2026.
It seems like you got a pretty good confidence level on royalties kicking up with those new machines being commissioned and operating.
Yeah, and it's tied to knowing that they already have supply agreements to use the capacity available,
Yeah.
which gives us, I guess, confidence in a faster growth in terms of royalties being remitted.
You mentioned already, but those 10 kilowatt machines, that's just to clarify, that's a great leading indicator. Their customers are buying it, they're testing it. It's no guarantee that it's going to be a success, but they have a high level of confidence that they're willing to go down that road. And then hopefully, not too far in the distant future, they'll scale up with a bigger production model.
Exactly. And I mean, it's not like they're buying a machine for 20 or 30 grand with low risk. They're putting some reasonable skin in the game, spending, north of 225K USD for a small scale unit, plus whatever facility readiness costs that come into play, plus their human resource costs. So they're already committed to moving down the path for more broader commercialization using this tech, but they need to get product into market in most cases to prove out their assumptions, right? They've got their business case. They want to make sure their pricing is appropriate. And then once they understand sort of what margins they can realize with these new applications, do the calculations on their payback period for a larger CapEx investment with one of our bigger lines.
With the products they put out with the 10 kilowatt machine, that'd be sort of a limited on maybe on a certain geography or certain customers where they test it out, figure out all the bugs, and it's like, okay, great, we know it works now. Now we'll spend the really big bucks on the next step.
That's all part of the process, yes.
Well, it's all sounding good. Anything else to be aware of here?
I think just like what I touched upon in reference to additional small scale units being sold, I think what is quite interesting right now is a few new application areas for us. I mean, historically, we've had the most success in fruit and vegetable and dairy industry and a little bit into baked goods and meat stack area, pet food as well. But there are some more called industrial use cases for this technology that we think
Interesting.
could become interesting for EnWave in the next couple of years here. So again, looking forward to hopefully confirming those deals, talking about those details, and then sharing that with shareholders.
Well, Brent, thank you. Appreciate the update and the outlook on the coming year. Thank you very much.
Great. Thanks, Martin.